Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillam, Chief Analyst at Wealth Within. This week I'll be discussing technical versus fundamental analysis, the All Ordinaries Index and this week's stocks. Now before we jump into the report, I'd just like to mention that if you have any thoughts on investing or trading, please comment below and be sure to subscribe to our channel to keep up to date. Let's get into this week's report. Technical and fundamental analysis are the two main forms of analysis for the financial markets. But what's the difference between technical and fundamental analysis, and which one should you use? Well, quite simply, technical analysis looks at the data of price, pattern, and time to analyse the movement of a stock or market. The assumption is that what has occurred in the past will likely occur again in the future. So a technical analyst uses the patterns in the market data to identify trends and make predictions about where a stock is likely to go based on how it unfolded in the past. Fundamental analysis, however, is a method of evaluating a company in an attempt to understand its intrinsic value. This is done by examining economic, financial, and other factors that influence the business. In short, it's called value investing, as the analyst is attempting to identify a stock or market that's undervalued in order to enter into the stock or market, and then looking to identify stocks or markets that are overvalued to exit the stock or market. There are often two distinct camps here, and both styles of investors will argue that the one they use is better and dismiss the other as rubbish or of little value. However, this is not the case, as both are valuable and both have their positives and negatives. The style of analysis you choose to use will depend on your own personal preference and how you wish to manage your stock or portfolio. What I mean by this is that in most cases a technical analyst and fundamental analyst have different goals in mind. The technical analyst attempts to identify trends where they can enter and exit over a shorter period of time, such as up to 18 months. Given this, the technical analyst is essentially looking at the strength and weakness of buyers and sellers of the stock or market. On the flip side, a fundamental analyst attempts to take long-term positions in a stock, and as such the analyst is more concerned with the underlying profitability, asset base and business practices of a stock. So what kind of analyst am I? Well, I'm mainly a technical analyst. However, I do use fundamental analysis in my research. We also teach both methods in our flagship course, The Diploma of Share Trading and Investment, and how to use both methods to your advantage. How do we do this at Wealth Within? Well, when we conduct our analysis, we start by looking at the charts of a company and applying some technical analysis to it. And then we conduct a fundamental analysis review of the company's financial statements. Doing both ensures we get a high probability of being on the right side of the market. Often fundamental analysts spend countless hours attempting to analyse a company's financials, only to not purchase it. Using technical analysis makes the process much quicker, as you can narrow down your selection prior to undertaking further analysis. Fundamental analysts assume that the market is mispricing a stock over the short term, but that the price of the stock will correct itself over the longer run, meaning they are working out if a stock is over or undervalued. So the fundamental analyst is looking at what to buy or sell. The technical analyst is looking at when to buy and sell, and here is the value in why I use both in my trading. Oftentimes, this combination works best when a stock is severely oversold, and entering a position too early could prove to be costly, as investors using only fundamental analysis often buy only to see their position continue to fall. The reverse also occurs where investors are exiting an overvalued stocks that continue to rise after exiting. So combining both methods gives you the best of both worlds. For those of you who are new to the markets and wanting to get into trading and not really sure how to go about it, or you just want to get the basics so you can try trading in a low-risk, safe way, then have a look at our Trading Mentor course, as this is perfect for beginners. As in the course, we support and teach you about both methods of analysis, give you some rules, and show you how you can use both methods of analysis to start profiting from the market quite quickly. So get on our website or give us a call and we can chat to you about what you want to achieve in the stock market and how you might go about getting it. So let's get into the charts. Okay, on your screen right now we've got a weekly chart of the All Ordinaries Index, and quite interesting to have a look at the market at the moment. As I was saying last week, I was expecting the market to really just have a little bit of a pullback, and if I just expand that up a little bit, you'll see what I mean. Is if we're looking at the current move, we've seen the last low was in June, or the first week ending the 1st of June. So we've had 1, 2, 3, 4, 5, 6 weeks moving up. It's whilst the market will move up for 6 weeks, generally it will move 4 to 7 weeks, and so we'll generally see 4 weeks up and a 1 week or 2 weeks down. So right now I'm expecting that this current week, it will probably fall away, and we might get 1 or 2 weeks falling away in the Australian market. As you can see there, the week ending the 13th of July, the Australian share market closed at 6351.9 points after hitting a high of 638,670. So it did go up, and you can see it went up, it went down, and it closed up near its high. So normally you'd think that was more of a bullish sort of sign, but it's actually indecision at this point in time, and I'm thinking it's got a bit of resistance around that 6,400 point mark. As I said, I'm expecting 1 or 2 weeks down, and it may not happen this week. It may happen next week, but in the next 1 or 2 or 3 weeks, we will see 1, 2 or 3 weeks where the market does fall away. Not a big issue. It's just normal things. The market goes up in stairs and comes down in elevators, as they say. So right now, nothing to be too worried about. I just want to have a quick look at the US Aussie dollar, and we can see, interestingly here, there's a daily chart now we're seeing on the screen. So we're looking at the 13th of July here, where we closed at 74 cents, just over 74 cents US in there. And we've had a couple of days down, and we've got a higher trough now than what that trough was, 73.61. Here we've got 73.60, so it's just slightly lower on this bar from the 12th of July, but we are moving up. Looking at this, so if it does break through this 74.84, we would start seeing the Aussie US dollar move right back up into this sort of 76 cent range, or 76 US cent range. Now, I want to actually go into the consumer staples actually and have a look in that. So on your screen right now, I want to have a look at a couple of consumer staples stocks. And you can see here it's been a really, really bullish index right back through to 2016. That's a weekly chart on the right hand side. So it's moved up very, very nicely from that low of 7923 to be up over 11,000 points now. So you can see that currently it's closing at 11,312 points. So, and I think it's still sustainable. I think we can still keep moving up. But the stocks in here, we're looking at Metcash. Now, Metcash currently is bearish. So we've seen the recent high on Metcash. If I get my little pointer to work and drag that out, you'll see it had a high here on the week ending the 25th of May. Here it had a high of $3.73, and it started to fall away, and it's been falling away 1, 2, 3, 4, 5, 6, 7 weeks now. And so the week ending 13th July, it hit $2.48, or it closed at $2.48. So if I just open this up, we can use our cool, nice little tools. And it's interesting how the markets run. As I said, it does move up and down and to get to where it wants to go. So at this point in time, Metcash, I would assume it's going to find some support, not in too distant future. So I'd be looking at finding support around that $2.34. If it breaks through that, then it's going to $2. Right now, I wouldn't be owning Metcash, but it doesn't surprise me it's coming down at this point in time. But I don't think it'll fall too much further, and it could become a nice buy. Then we get Treasury Wines Estate. It's a little bit different, this one, because it's gone quite vertical. So if I look at this and drag that out, you can see here how this is the whole history of Treasury Wines Estate. Right now, if you're in this stock, I continue to hold it. It really is looking quite nice, but I wouldn't expect this run to last too much longer. Looking at here, we've had the previous high here was, what's that? $6.36, so now we're over $20, so it has run a really, really hard race, so it will need to do a bit of a retracement. So it wouldn't surprise me, given how vertical it started to go, that our acceleration of the angle we talked about prior, that it will start to fall away and find some support somewhere down there, because remember we just talked about markets do go up in stairs and come down in elevators, and at the moment we need to have it come down a little bit. GNC is an interesting stock, obviously, with GrainCorp, really volatile sort of stock. You can see here on the left and the right, really volatile all the way through here, in terms of, you know, how do you get into it and how do you get out of it and how do you actually make money, and that's really short-term trading. And you can see here it's very sideways, and this is more of a cyclical stock. So if I put a little a horizontal line across here and another one across sort of here, you can see how most of the price action happens between these two black lines. So between that sort of $7.40 and nearly $10, if you look at all that price action, probably 2/3 of the price action of that stock is between those levels. But again, it's how do you get in, how do you get out? When it does run, it does okay. Right now, what's it looking at? I'd say if it breaks through that line there, currently it's closing at $7.49. If it breaks through that $7 mark, roughly through these troughs, then I'd say it'd be starting to head down to around that $5 mark at this point in time. But GrainCorp's not something that I'd actually want to be in right now. Then we're moving on, looking at Blackmores. Blackmores in the vitamins, and that did shot up with all that China interest with selling vitamins to China. We can see that huge run from that $10 right up to $220 as people were speculating on Blackmores going on forever. What you see is most of this part here, that was all the amateurs in the market. What happens is with the market is the people that don't know, they're the ones that get in last, and they'll try and take it up because they've seen something move 50, 100%, and then they'll jump in thinking they're going to move. But then those people that are jumping in all of these prices, they've been holding all the way down to here as well. But right now it's starting to turn around, but it will find that balance or that equilibrium for this, what's a fair price for Blackmores. Right now we're looking at its closing at this point in time Friday 13th of July closed at 144.82. If I was in it, I'd still be holding. I'd really be sort of holding at the moment, because this really is not telling me it's bearish these last few months, but I'd be getting ready to exit, especially if you brought through here, through this all-time high, and then through probably from around about August 2015 I'd be looking to exit. Okay, so that's it for this week's good luck and good trading. If you do want me to have a look at a stock for you, really let me know. Just shoot an email. So it's just on the bottom here of this post or this video, just type in some comments if you want me to look at a stock for you. I'm happy to have a look at those sorts of things. If you've got a question, please shoot through some questions and I'm quite happy to answer those as well. But that's it for me.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillam, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.